We're on the MT5 platform once again today, and I just wanted to highlight a couple of points. In particular, an indicator that we can see across the four charts. And also, just to remind you, it's very easy to forget. We're all familiar with MT4, the fact that we can trade Forex quite happily on MT4. But as soon as you move to the MT5 platform, it really does open up a myriad of other markets. Now in this video I've got gold, as you can see, top left and top right. I've got a 5-minute gold and a 15-minute gold chart. Down at the bottom left I've got the 30-minute for the Dow 30 US 30 cash market, and over on the right I've got another commodity on 15-minute, which is for coffee. And on MT5 it really does open these markets up. Of course you've got spot Forex as you would expect, but in addition to that you can trade indices. You can trade a variety of commodities if you're looking to trade things like oil, for example, some of the softer commodities, metals, what have you. And in addition to that, you've also got stocks. So it really does open this up, and it's extremely cost effective. You don't have to worry about the margin requirements which would be associated with a futures account, which are certainly high when you're trading some of the larger contracts. So in this way you can access all the markets quite happily on the MT5 platform. And what I wanted to highlight today was really just one particular indicator, which is the volatility indicator, which is this one here with these two little purple dots, one at the bottom and one at the top, as you can see here. And if you're familiar with the indicator on MT4, then you'll know that on that particular platform it has a little purple arrow top and bottom, but on MT5 it has two little purple dots. Other than that, the indicator works in exactly the same way. And what the indicator is telling you loud and clear is it works on average true range. In other words, for that particular instrument on that particular time frame, what the indicator is doing, it's constantly recalculating the price action against the average true range for that particular time horizon. And where the price action moves outside the average true range, in other words, the norm, if you will, of expected price action, then the indicator is triggered in real time, and it will tell you instantly that the price action has moved outside the average true range, and therefore you are witnessing volatility. As I say, the indicator triggers. So once that condition has been met, in other words, once the indicator has seen a move outside the average true range, then the indicator will fire off before the candle closes. So you'll know in real time, in whatever time frame you're trading, that the volatility indicator has triggered, and you're seeing volatility develop in that particular time horizon on that particular candle. Now you might say, well, that's all well and good. How does that help me? The key is this, that once you see volatility in the market, generally speaking, it is associated with market maker or insider activity participation. And as you can probably appreciate at those points, what they are trying to achieve is a situation where you are forced into a weak position. So where you see volatility, what often occurs thereafter is that the price action then develops into sideways congestion, or indeed reverses completely. So you will see the volatility occur, and the price action will then move into a sideways region. And there are a couple of reasons for this, not least because when you are in a congestion phase, if you're stuck in a weak position in a congestion phase, then the emotional pressure is building all the time, the longer that congestion phase extends. And that is one of the many mechanisms that the insiders and market makers will use to trap you into a weak position, and ultimately to get you to close out of a position through the pressure of time. So when we see the volatility indicator triggered, what we're anticipating, and this business is all about anticipation, what we're anticipating to happen next is that we are at the very least expecting some congestion to develop with the potential for a reversal. Now, a reversal does not always happen, but you almost always get a degree of congestion. This is on gold on 5 minutes. If we move over alongside it, we've got gold on 15 minutes here, and you can see this was a candle to the downside. Again, the volatility is triggered. What happens? The following candle, immediately the price action reverses. Now imagine if you've jumped into this position short at this point, somewhere in this candle, and then you see the market reversing against you. The pressure is increasing. It increases further with another move back higher and almost back above the original opening price of this candle. And then we're on to an extended congestion phase. Ultimately, of course, this market does break down further in a series of steps, and down we go. But the pressure of time in here is immense. That is what is triggering the emotional pressure. Do I close out? What do I do? I don't know. I'm not sure, etc. If we move down to the 30-minute down here for the US 30 cash market, again, we've got an example here with the trigger to the downside. Big widespread down candle. You can imagine a lot of traders jumping into this one short, seeing an opportunity to make some quick money, quick bucks on a shorting position. What happens? Almost instantly, the reverse candle comes in, the market moves up to the upside, into congestion, and on this occasion does indeed reverse completely and move in the opposite direction on that particular time horizon. Finally, over here onto coffee on the 15-minute time horizon. Another nice example, nice widespread up candle, looks fine. What happens? We get the volatility triggered. Again, you can imagine traders jumping in here going long quite happily, expecting the market to roar higher. What happens? We get the volatility triggered. The market moves into the extended congestion phase. Now, on this occasion, it looks as though the bullish trend is going to be maintained. You can see at the bottom here, this is the trend monitor. And that's been steadfastly blue throughout this congestion period. We've got a support level here on the support and resistance indicator, which is very strong. That's why it's a solid line as opposed to the dotted line down here, which is less strong. But this is a solid line of potential support, which seems to be holding for the time being. And ultimately, it looks as though we are going to continue higher for coffee in the longer term. But nevertheless, the pressure of time in here may well have triggered a lot of traders to close out positions, which ultimately may well move into further profitability. But the job of the inside of the market maker is to actually trap you or force you into either a weak position or ultimately to close out through the pressure of emotion. It's a great little indicator. It's available on both MT4 and MT5, and indeed all our indicators are available on the MT5 platform. And the MT5 platform is just so cool because it's very similar in look and feel to the MT4. So if you're familiar with MT4, you'll be able to jump straight into MT5, and then you've got all the benefits of not only the markets, but also this huge array of different time frames down here, which you really don't have on MT4. MT4 can be quite limiting in that respect, but on MT5, you've got this great array of time frames available. What's interesting, literally as I'm speaking now, you can see here on the 5-minute gold chart, as I said earlier on, the volatility is triggered in real time. So this candle hasn't closed yet, but you can see we've got volatility developed. The price action has moved outside the average true range once again. So there's a lot of volatility in this region. And once that candle has closed, our expectation is that we are likely to see further congestion developing. So you can see it happening in real time. Yes, in terms of the trend monitor, we're still in a bullish phase of price action. The trend monitor is still blue. We've not seen any transition. Maybe if we went to a slower time frame, then we would see some transition there. But certainly in terms of 5 minutes, we're not seeing any transition at present. But this is a really nice example, and it really just demonstrates the power of the volatility indicator and how it is triggered in real time. So you get a heads up instantly of when the price action has moved outside the average true range and what you're likely to anticipate next, which is what this business is all about. Hope you've enjoyed this particular video. Lots more to come. Thanks for watching, and see you again soon, and bye for now.